You begin your hedge fund journey at the absolute bottom as an intern or junior analyst at a small boutique firm managing just a few $100 million in assets. The alarm jolts you awake at 4:45 in the morning inside a cramped studio apartment in a gritty neighborhood far from the gleaming skyscrapers. You brew cheap instant coffee, scan overnight market headlines on your phone while still half asleep, and squeeze onto a packed subway car where the air feels thick with commuters. Your laptop bag digs into your shoulder as you mentally rehearse the data pulls you will run the moment you reach the office. The workplace itself is modest, with shared desks under harsh fluorescent lights and a handful of Bloomberg terminals that sometimes lag. Your role is pure execution, updating watch lists, scraping financial statements from Edgar, building basic Excel models for valuation comps, and occasionally fetching coffee or printing pitch books for the senior team. The founder, a battle-hardened veteran from the 1990s bull market, rarely appears in person, but his presence looms through terse emails demanding tighter analysis. The mid-level portfolio manager who directly oversees you is ambitious yet frustrated, barking instructions while juggling multiple screens and expecting you to keep up without much hand-holding. Lunch is a hurried sandwich from the downstairs deli, eaten at your desk while listening to earnings calls on mute. Evenings often stretch past 8 or 9 as you finish screening potential longs or shorts in mid-cap stocks, the fund's simple long-short equity strategy. Compensation starts around 80,000 base, with a tiny slice of the bonus pool that feels almost symbolic. You celebrate small wins, like when a stock you flagged moves favorably. But the real lessons come from brutal rejections of your early ideas, because they seem too obvious or retail-like. Social life barely exists. By the time you collapse on your couch, you are too drained for anything beyond scrolling industry Twitter or LinkedIn to see where college friends landed at bigger shops. Yet, this level 1 existence plants the seeds of obsession. You absorb the language of finance, learning pairs trading, short squeezes, and the sting of unexpected earnings misses. You witness small team debates that swing the profit and loss by mere thousands, which at this scale feels monumental. Health suffers from irregular meals and skipped workouts, but you start running early mornings to clear your head and build resilience. Networking happens through timid coffees with alumni, and you devour biographies of investing legends to fuel your ambition. A market crash early in your tenure teaches survival, as the tiny fund barely weathers redemptions and position cuts. This is the gritty foundation where thick skin forms, and the dream of hedge fund success begins with spreadsheets, sweat, and quiet determination. After proving yourself through 2 years of relentless work, you jump to a mid-sized multi-strategy hedge fund overseeing several billion in assets. The office upgrade is noticeable, with sleek glass walls, free gourmet coffee stations, and even a small gym in the basement that you rarely have time to use. Your new apartment is a step up, perhaps shared with a roommate to afford the better zip code, and your base salary climbs to around $150,000. Mornings still start early, but now you scan global overnight moves across equities, credit, and macro signals before the New York Open. As a junior analyst, you receive real sector coverage, maybe technology or consumer goods. Your days fill with building sophisticated models that include sensitivity tables, churn rate forecasts for SaaS companies, or channel checks gathered through discrete calls with industry contacts. You generate investment ideas and present them in weekly pod meetings where the portfolio manager, a sharp 30-something gunning for his own larger book, challenges every assumption. The multi-strategy platform exposes you to everything from fundamental long-short to quant overlays and event-driven plays, forcing you to collaborate across teams and understand how different strategies interact during volatility spikes. Bonuses become meaningful, potentially pushing total compensation past $250,000 in a solid year, which lets you upgrade your wardrobe, enjoy occasional upscale dinners, and begin saving seriously. The pressure intensifies, though. When your recommended positions move against the book, the PM's disappointment is palpable, and performance attribution meetings on Mondays feel like interrogations. You celebrate wins like shorting a hyped IPO that craters on missed numbers, adding meaningful basis points to the pod. Losses teach harder lessons, such as a long position suffering during sudden inflation data that shifts market regimes. Socially, you integrate into a larger cohort of ambitious analysts. Happy hours turn into bonding sessions over shared complaints about hours and politics, while rivalries simmer over capital allocation. Dating proves tricky, as explaining your role often draws blank stares or jokes about shorting companies for profit. You pursue the CFA or advanced data skills in Python to stay competitive, and start using more professional research platforms. Travel for company visits or conferences begins, usually in economy seats but feeling important nonetheless. This Level 2 phase marks your transition from learner to genuine contributor, where stamina, adaptability, and the ability to recover from drawdowns separate those who advance from those who burn out. With a track record of solid ideas, you advance to senior analyst or associate portfolio manager at a large global hedge fund managing tens of billions. The environment shifts dramatically to panoramic office views, modern art on the walls, dedicated support staff, and executive perks. Your compensation now features a high six-figure base with meaningful bonus and carry potential that can reach 7 figures in strong years. You live in a proper one-bedroom with a doorman and perhaps start building personal investments outside the fund. At Level 3, you gain real ownership. You run a meaningful sleeve of the portfolio or lead coverage on a theme like sustainable technologies or healthcare innovation. Responsibilities expand to managing a small team of juniors, conducting deep due diligence, including expert networks and site visits, and presenting high-stakes recommendations to the investment committee. Global macro factors dominate your thinking as you monitor elections, trade tensions, and central bank policies that ripple across asset classes. A memorable trip to a major tech hub yields direct conversations with executives and sparks a conviction trade that performs well after positive regulatory news. Team leadership requires balancing mentorship with high standards. You review models, deliver constructive feedback, and navigate internal credit for successful ideas amid subtle politics. Risk management becomes second nature, with value at risk limits, stress testing, and careful position sizing to avoid market impact on larger trades. Compensation aligns you more closely with fund performance, motivating sharper analysis. Lifestyle upgrades appear through better vacations, cultural events, and perhaps early family planning with support systems in place. Yet the weight of responsibility grows. A bad quarter invites scrutiny from senior leadership and limited partners during roadshows, where you must eloquently defend the thesis. You witness a peer's career stall after an oversized bet sours, reinforcing the need for discipline. Networking elevates to dinners with institutional investors and occasional elite forums. Personal habits evolve toward mindfulness or journaling trades to improve decision-making under pressure. This level cements your reputation on the street as someone with genuine edge, while revealing how competitive and political the upper ranks truly are. Reaching portfolio manager at a premier multi-billion-dollar hedge fund represents a major leap. You now run your own book with hundreds of millions or even low billions in allocation inside a firm known for consistent alpha. Your daily life includes car service or a short walk from a spacious luxury residence, and compensation routinely enters the multi-million range with performance fees that can multiply earnings dramatically in good years. Level 4 demands strategic command. You construct diversified portfolios, blending high-conviction fundamental bets with sophisticated hedges using options or derivatives. Mornings involve reviewing overnight global performance, adjusting exposures based on news flow, and coordinating with a larger team of analysts and traders. Strategies might include thematic plays on artificial intelligence or event-driven opportunities around mergers and spin-offs. Executing sizable trades requires finesse to minimize slippage through prime brokers and algorithms. Investor relations form a core part of the role. You draft quarterly letters, host conference calls, and explain performance nuances during periods of style rotation or volatility. A standout year might feature a well-timed bet on a sector recovering from pandemic disruptions, delivering strong, risk-adjusted returns measured by Sharpe ratios and controlled drawdowns. Leadership extends to hiring, team offsites, and cultivating a culture of intellectual honesty. Wealth accumulation accelerates, allowing for diversified personal assets, philanthropy, or luxury experiences like private event access. The psychological demands peak here. Drawdowns test resilience and force rapid adaptation, whether during flash crashes or geopolitical shocks. Family life requires deliberate scheduling, as work can intrude on important moments. Your network now includes fellow portfolio managers and occasional interactions with policymakers at high-level gatherings. This stage delivers immense intellectual satisfaction from decoding complex market puzzles while highlighting the isolation that can accompany success and the constant need to defend your edge against newer competitors like quant-heavy platforms. At the apex, you become managing partner or launch your own hedge fund, often spinning out with seed capital from trusted relationships and growing rapidly to several billion under management. You set the strategic vision, design the culture, and bear ultimate responsibility for performance and operations. Offices are tailored to your taste, with advanced technology, wellness spaces, and collaborative environments that attract top talent. Level 5 revolves around autonomy and institution building. You refine a differentiated strategy, perhaps concentrated long-short, activist campaigns, or a hybrid incorporating machine learning signals. Days blend capital-raising roadshows, talent recruitment with equity incentives, and high-level decision-making across time zones. Fundraising involves crafting compelling pitch materials and meeting sovereign wealth funds or endowments who grill you on process and risk controls. Compensation reflects true ownership through management fees and a substantial share of performance carry. Successful scaling can generate life-changing wealth measured in tens or hundreds of millions annually, enabling multiple residences, private travel, and significant philanthropic endeavors. Challenges shift toward operational excellence, regulatory navigation, key person risks, and preserving alpha as assets grow larger and returns naturally compress. You mentor rising analysts, advocate for industry standards, and reflect on broader market evolution from the 1990s to today's AI-driven environment. Personal fulfillment mixes with new pressures, like succession planning and public scrutiny if performance falters. The journey from Level 1 intern to Level 5 founder illustrates a full arc of growth, from data grunt to visionary leader. Each stage brings unique thrills, painful lessons about volatility and human behavior, and the enduring allure of generating alpha in an unforgiving arena. Luck plays a role alongside skill, but consistent curiosity, resilience, and adaptability separate survivors from legends. Whether navigating a small fund's survival or steering billions with institutional precision, the hedge fund life rewards those who embrace its intensity while remembering that markets ultimately humble everyone.